If you have a pension, Social Security keeps a different set of rules for you. And almost nobody with a pension has ever been told that. One question decides which set applies. It takes about 4 seconds to answer. Almost nobody has been told it matters. And for roughly 3 million Americans, the correct answer turned out to be worth $17 billion in back payments. Here's the question. The job that gave you that pension, did it take Social Security tax out of your paycheck? Hold on to your answer. It matters more than anything else in this video. By the end, you'll know which rule book applies to you. The one place your pension is completely ignored, that one is good news, and a law that changed in January of 2025 that a lot of the people it was written for still haven't acted on. I'm Clarence. This is the retirement map. Let's chart it. Most jobs in this country pay into Social Security. You work, they withhold the tax, you earn credits, you get a benefit. Simple, but some jobs don't. For most of the last century, certain state and local employers opted out. Some teachers, some firefighters, some police departments. Federal workers hired before 1984 under the old civil service retirement system. And some foreign systems if part of your career was overseas. Those are non-covered pensions. You earned a pension, but you weren't paying Social Security tax while you earned it. Here's where people get it wrong. Most public employees are covered. Social Security's own figure is that about 72% of state and local public workers pay in exactly like everyone else. Working for a government does not automatically put you in the non-covered group. In one case I know some of you are already wondering about, a military pension is covered. Service members have paid into Social Security since 1957. I'll come back to that because there's money sitting there a lot of veterans have never claimed. So how do you find your answer? Pull an old W-2 from that job and look at box 4. That's Social Security tax withheld. If there's a number in it, you were covered. If it's blank, you weren't. Your statement at ssa.gov will tell you as well. Before we split into the two groups, 3 things hit you if you have a pension no matter which group you're in. First, your pension can make your Social Security taxable. The mechanism is worth getting right because people hear that and think their pension is being taxed twice. It isn't. Your pension raises your adjusted gross income, dollar for dollar. And your adjusted gross income is the first number on the line that decides whether your Social Security gets taxed. The pension isn't taxed twice. It pushes up the total that decides everything else. That line has a name, provisional income. Your adjusted gross income plus any tax-free interest, plus half your Social Security. Second, your pension can raise your Medicare premium. There's a surcharge called IRMA above certain income levels, and it runs on a 2-year delay. Now, I did a full breakdown of both of those in the video on which account to touch first. That one goes deep on the thresholds and how to plan around them. It's on screen now, and I'd watch it after this one. I'm not going to repeat it here. What I am going to give you is the part that video didn't cover. That provisional income line, the one deciding whether your Social Security gets taxed, is $25,000 if you're single, $32,000 if you're married filing jointly. Those numbers were set in 1983. They have never been adjusted, not once. Not for inflation, not for wages, not for anything in 43 years. Social Security's own research office says so in writing. Their words, because those income thresholds are not indexed to prices or wages. The proportion of beneficiaries who pay taxes on their benefits has increased over time. Here's what that drift looks like. In 1984, fewer than 1 in 10 beneficiaries owed tax on their Social Security. By 2015, it was 52% of beneficiary families. Their projection for 2030 is 58%. Nothing about the law changed. The line just stood still while everything else moved. So why does this land harder on you than on everyone else? Because of one thing almost nobody frames correctly. A pension is the only retirement income you cannot turn off. Think about what everyone else can do. Someone living on an IRA takes less this year and more next year. Someone doing Roth conversions picks the amount to the dollar. They can steer their income around those lines. You can't. Your pension arrives on the first of the month, whether it helps you or hurts you. You start every year with the floor already set, and whatever room is left underneath those lines is all you have to work with. Let me show you what that costs with round numbers. Yours will be different. Ray is 66, single, retired. His pension pays $2,400 a month. His Social Security pays $2,000 a month. Run the line. His provisional income comes to $40,800. That's above the second threshold, so about $10,280 of his Social Security is taxable. Now take the pension away and keep the same Social Security. His provisional income drops to $12,000. Under the line, 0 of his Social Security is taxable, so the pension didn't just add $28,800 of taxable income, it pulled $10,280 of his Social Security into being taxed, money that would have been completely tax-free otherwise. And inside that zone, every extra $1,000 of pension creates $1,850 of taxable income. If Ray's in the 22% bracket, the tax on that next $1,000 works out to about 40%. Be careful with that number because it gets misquoted constantly. That is not 40% of his pension. That is 40% of the next $1,000, a phantom bracket that appears nowhere on the IRS rate table. One more thing worth knowing. Take that same $40,800 and file it married filing jointly instead of single. The taxable amount drops from $10,280 to about $4,400. Identical income. Different filing status. That gap is why a surviving spouse's tax bill can jump the year after a funeral, even when the money coming in barely changed. If that's the kind of thing you want more of, the number nobody mentions and the caveats attached to it, subscribe. That's the whole channel. Now the good news, and this one is genuinely good, there is one place your pension is completely ignored, the Social Security earnings test. If you claim before your full retirement age and you're still working, there's a limit on what you can earn before they hold back part of your check. In 2026, that limit is $24,480, and above it, they withhold $1 for every $2 you earn. An enormous number of people believe their pension counts toward that limit. It does not. Social Security's language here is about as plain as government language gets. They say, we don't count pensions, annuities, investment income, interest, veterans benefits, or other government or military retirement benefits. Only wages from a job and net self-employment earnings count. Your pension could be $10,000 a month and it would not cost you $1 under the earnings test. And one more correction, because this one costs people sleep. The earnings test is not a penalty, it's a deferral. The months they withhold get credited back. Your monthly benefit is recalculated upward when you reach full retirement age. You get it back. Almost nobody explains that part. Now let's deal with something you almost certainly saw a headline about. In 2025, a new tax law created a deduction for people 65 and older, $6,000 per person, $12,000 for a couple if both of you are 65. It phases out above $75,000 of income for a single filer, $150,000 for a couple, and it's temporary. It runs through 2028 and then it's gone. That's the real provision. Here's the problem. The headline that went around said the law eliminated taxes on Social Security. Social Security itself sent a mass email saying 90% of beneficiaries would no longer pay federal income tax on their benefits. That is not what the law does. The Congressional Research Service, the nonpartisan analysts who work for Congress, put it in writing. Their words, the calculation of taxable Social Security benefits remains unchanged in Section 86 of the Internal Revenue Code. The formula deciding how much of your Social Security is taxable did not change, not by 1 comma. What actually happened is you got a deduction based on your age. It lowers your taxable income. It is not a Social Security exclusion. And that 90% figure, roughly 2/3 of beneficiaries already weren't paying tax on their benefits before this law existed because their income sat under those 1983 thresholds. The number counted people who were never being taxed in the first place. The Tax Policy Center's estimate is that about half of recipients will still pay some tax on their benefits. And the one that matters most if you retired early. If you're under 65 and collecting Social Security, you get nothing from this deduction. Nothing. It's keyed to your age, not to whether you receive Social Security. Now back to the question from the beginning. If your answer was yes, that job withheld Social Security tax, then what I'm about to describe never applied to you. Nothing was ever taken from your Social Security because of your pension, and nothing changed for you in 2025. But if your answer was no, if that pension came from work that didn't pay in, then for most of your working life, two rules were reducing your Social Security. As of January 2025, both are gone. The first was the windfall elimination provision. If you had a non-covered pension and you'd also earned Social Security from other work, it cut the benefit you had earned. The second was the government pension offset, and that one hit spouses and widows. If you had a non-covered pension, it reduced, and very often completely erased, the spousal or survivor benefit you'd otherwise draw from your husband or wife's record. There are people who were told their widow's benefit was zero. In January 2025, the Social Security Fairness Act repealed both, effective going back to January 2024. Social Security has since made more than 3.1 million payments totaling $17 billion. Now the honest part, because this is where you need to be careful about what you're told. There are two groups and they were not treated the same. If you were already receiving benefits or you'd already filed an application, you generally got paid back to January 2024. But if you never applied because someone at Social Security told you years ago the offset would wipe out your benefit anyway, so why bother? Social Security is applying its standard rule instead. 6 months of back pay from the date you apply, not back to 2024. 4 senators wrote to Social Security in April 2025 objecting to that, arguing that people were, in their words, wrongly advised by employees of Social Security not to apply. As far as I can find, that dispute is still unresolved. Social Security hasn't reversed its position, and no fix has passed. So I'm not going to tell you you're owed money back to 2024. I don't know that, and anyone telling you they do is guessing. Here's what I can tell you, and it's the most useful thing in this video. If you never applied because you were told the offset would zero you out, every month you wait may be a month you never get back. That 6-month window runs from the date you filed, not from the date you became eligible. Waiting costs you no matter how the dispute is settled. If that's you or someone you love, that call is worth making this week. And now the veterans, because this one comes with good news attached. If your pension is military retirement pay, none of what I just described ever applied to you. Military service has been covered by Social Security since 1957. You paid in. Social Security's own words, your military pension does not affect your Social Security benefits. So if you've been sitting there wondering whether you got shortchanged, you didn't. There's no back payment coming, and that's the honest answer. But there is something else, and it's real money a lot of veterans have never claimed. Special extra earnings credits for military service. If you served between 1940 and 1956, there are credits worth $160 a month of recorded earnings. And here's the catch, they're only added when you apply for them. They are not automatic. 1957 to 1967, same thing, added when you apply. From 1968 on, they're already on your record automatically. So if you or your spouse served before 1968, that's a phone call. And unlike the repeal dispute, nobody is arguing about this one. Now the honest section, because every one of these has a flip side. If your pension came from covered work, and most pensions did, then this video was mostly tax mechanics for you, and the real planning lies in that withdrawal order video, not this one. If you're under 65, the new deduction does nothing for you, and I'd rather you hear that from me than find out at tax time. And on the Fairness Act, Social Security has not published a substantive update since July of 2025. They haven't said the payments are complete. They haven't published how many people are still waiting. I looked. That information isn't public right now, and I'm not going to pretend otherwise. None of this is advice about your situation. Every pension is different and every tax return is different. What I can give you is the map, where the lines sit and what to ask. So here's the whole thing in 3 questions. 1. Did the job that gave me my pension withhold Social Security tax? Pull the old W-2, look at box 4. That single question sorts you into everything else. 2. Where does my provisional income land against $25,000 or $32,000 if I'm married? Take last year's return, find your adjusted gross income on line 11, add half your Social Security. That's your number. 3. If I'm in the non-covered group and I never applied because someone told me not to bother, what am I giving up for every month I wait? Answer those 3 and you'll understand how your pension and your Social Security fit together better than most people who'll advise you. In the comments, just type your answer to question 1. Covered, not covered, or not sure. One word. I read every single one, and not sure is a completely legitimate answer. It's the most common one there is. And if you know someone with a government pension, a teacher, a firefighter, a police officer, or someone who was told years ago that their widow's benefit would be 0, send them this video. That last group is exactly who this law was written for, and a lot of them still don't know it passed. This is education, not personal advice. Your pension, your tax return, and your Social Security record are specific to you. Confirm your numbers at ssa.gov and irs.gov, and for a decision this size, an hour with a fee-only advisor is money well spent. If this was useful, subscribe. The Retirement Map charts one retirement decision every Monday and Thursday. And next time, what if you're 60 years old with almost nothing saved? Not a lecture, not fantasy math, the actual plan I'd use step by step, starting from 0. If that's you or someone you love, I'll see you there.